There's something been bothering me about Nissan's quest to find a savior. Something back in the back of my mind, and it is the question, why? When you look at their financials, they're not good, but they don't scream a company that's on the verge of collapse. But that's actually what some executives have said. CarScoops reported that 2 Nissan executives said that they have 12 to 14 months, something like that, before they can't continue operations. But when you look at their financials, it doesn't scream it. So what's the rush for a savior other than having a big investor to replace Renault and give kind of security to the marketplace? Why is it an emergency right now? Well, it's because there's a giant ticking time bomb sitting in their financials. And let's dig into it today. Welcome back to All Cars, y'all. Now, I wish I could take credit for coming up with this, but it was from the subreddit Cars, and somebody made a post about this. I started digging into it and verified what he said, and it's rather shocking. We're going to start with what are Nissan's financials right now, why they don't look terrible but not good, and then dig into this time bomb real quick and talk kind of about how Nissan's doing in the marketplace. So first off, let's look at the first quarter of 2024. So this would have been ending in June of 2024. And it shows everything here is in Japanese yen. 1 billion operating profit, down 99% year over year. And so we're going to scroll down here to these nice little charts, and it's interesting to see in the first quarter that sales were actually up in China. Sales were slightly down, only about 5,000 units here in North America. And so with an emergency, you expect massive drops in sales, and that's not exactly happening. This doesn't scream healthy company, but it doesn't scream catastrophic. When you look at their financial performance here, their operating profit is 0%, okay? But they have cash on hand, 1.4 trillion, that'd be trillion yen. That's about 10.5 billion US dollars. Keep that in mind, 10.5 billion. And so here we look at the individual sales. We don't need to go through all this except for this chart right here. This is their forecast moving forward. They expect the age of their portfolio to start dropping because they're releasing new products. One of their problems has been an aging portfolio. They expect their sales to start going up, and they expect inventories to start going down because they've really loaded up on inventory. So they're pushing their retailers to get rid of inventory, sell at a loss. That's not healthy either. But let's look at the next quarter. So they actually report this as the second quarter as a first half of results. We have to go down to the appendices to see this break out because it's interesting. The profit for the quarter, for the half actually is up quite a bit, but it's down year over year. So I'm going to skip all of this and get down to the appendices. Volume in China fell by 20,000 units. Volume in North America fell slightly, about 1,000 units. So Nissan is losing market share in their 2 biggest markets. Not healthy. Now their operating profit is now up to 1.1%, but still that's terrible, and they still have nearly 1.4 trillion in Japanese yen in cash, but they're burning through it relatively quickly. That's a big part of the problem here. But none of that screams, oh my gosh, we have 1 year to live. And they have been instituting a turnaround plan of sorts. They are reducing their manufacturing capability. They are laying off staff. The CEO took a 50% pay cut, and I believe many executives ended up taking pay cuts as well. We don't know what happened or what effect that had until later this week, the week of February 13th, 2025, because that's when Q3 results are going to come out, and I'm excited kind of to hear those. But what's important here is while the sales are staying relatively even, only dropping slightly here in North America, which includes Canada and Mexico, the percentage of leases has jumped up to 29%. So NMAC is the Nissan Motors Acceptance Corporation. That's here in the United States. That is 29%. Now, there's another article I found that Nissan sales right now are 44% fleet sales, which includes leases. So Nissan is falling into the same death spiral that General Motors and then Chrysler before it fell into, of pushing fleet sales out just to keep volume up. When you sell to rental car companies and places like that, you have a smaller profit margin on each one. That hurts your profitability that we're seeing, but you keep your volume up. When you sell leases, it's a different experience that we're going to dig into here in a minute. But selling to fleets like rental car companies has a dual impact. The first is I've actually read and seen that something like 50% of Nissan dealers are not profitable right now. They're having trouble moving the metal. So when you sell to a fleet, you bypass your dealers entirely. So that extra volume that you're showing, it's not going to your dealers. The second thing is once those are used for 12 months or 18 months, however long it is, and they come back out of those rental fleets, they are cheap, low mileage used cars that are competing against your dealers as well. It's a double whammy for the dealers. But the leasing is what I want to dig into, because that post on Reddit that I saw digs into the leasing, and that's where the Timebomb is sitting. So let's go over here, and this is actually, if I scroll up to the top, way to the top, this is actually a bond offering. And I reference it because down here just a little bit, there's a nice little flow chart which shows how leasing works. Now, what we want to do is we want to simplify this dramatically. Nissan produces a car and they sell it to the dealer, and the dealer typically finances it, but the dealer owns it. And Nissan gets to bank a sale. Okay? Now you come along and you want to lease it because Nissan's offering a really nice lease deal to you. Well, they sign all the paperwork, and then essentially this company, this bond company, buys it from the dealer. And your lease is dependent on paying the depreciation for the time you own it, plus a little bit of interest so that everybody makes a little bit of money. Now, what these bond companies, this Nissan Auto Lease Trust, what the trust does is they take all of these leases they have, package them as a financial instrument and say, look, we have X number of leases, we have this expected depreciation, we have all these other factors, these people are going to be paying, please buy our bond. You buy our bond, they get their money back to go start more leases with. The bondholder gets a cash payment from you paying on the lease. Pretty simplified, but that's how it works. Now, at the end of the lease, you go to the Nissan dealer, you hand them the keys, and you get to walk away. The trust sells it back, or Nissan sells it back, NMAC sells it back to the dealer, and they now get a car they can certify and put on the lot as a CPO. But the key here is the depreciation along the way. And if you start digging into this form, and I'll provide it below, and this is the most recent one I can find. It is for Nissan Auto Lease Trust 2023, but the information is rather interesting. A couple of things here to dig into. Let me just scroll down. The first thing to point out is that they have over 450,000 leases out there right now, rolled up in this trust that they're selling bonds off of. Their average price for their cars is just over $26,000. That's the actual, the sticker price, if you would. And then the base residual value is $18,000, saying that they are assuming just over a 70% residual value. And this is based on an average term of 37 months lease. So you got some 36s, you got some 42s, whatever it happens to be. But the most important number that comes out of all this, and not surprisingly, the Rogue, the Altima, the Sentra, the Pathfinder, and then surprisingly, an Infiniti, are the top leased vehicles. That's exactly where you would expect it to be. Total residual haircut as a percentage of the securitization value, 18.42. What that means is this. The way manufacturers offer lease deals is they basically put some money into it for you. They fudge the numbers a little bit. If you're going to buy a $27,000, $26,000 car and it's going to have a 70% residual value, what is that, $18,700, something like that, you've got to pay that plus that little bit of interest. So what if they take some of that cash back they would normally offer on a cash or a finance deal and they put it in there? Your payment begins to shrink. And that's how they offer those great deals. You're paying less of that depreciation because basically Nissan is throwing it in. But this haircut means that they're assuming that 70-ish% residual, but actually the car's worth less. That gap is the ticking time bomb. Because when that lease is turned in, when you turn in your Nissan and it goes back over here and they sell it to the dealer isn't going to pay whatever that mythical residual was. They're going to pay what it's really worth. And what this has run into is that after COVID, with the supply chain constraints, prices were going up and used car prices were going up too. But they've peaked and dropped, and Nissans depreciate a little bit faster than some other cars out there. This 18.42 is the percent difference between the 70% assumed value and what the dealer would actually pay. Dramatically simplified. But basically, instead of having an $18,700 used car, you now have $15,255. That $3,500 difference, Nissan has to eat it. Nissan has to make up that difference. That's the haircut. Now multiply that by 450,000 leases just for that year. Let me do it real quick. Okay, so we're going to say it's $3,352 per vehicle. Multiply that by 450,000. $1.5 billion that Nissan's going to have to throw out there when they have a 0 profit margin or a 1% profit margin. And that's just in North America. That's the bomb. And that's just for that 2023 leasing trust. It's absolutely shocked me to see it. Their market value is only about 10.5 billion right now. And that's up because they were in conversation with Honda. Their cash on hand is only about 10.5. So you can see that you would have nearly 15% of your cash every single year flowing out the door if it doesn't get worse because of all those fleet vehicles that are going to come back in and start depreciating even more, pushing down the used car prices even more. And it's worth mentioning that if you look at a Nissan and you look at a Toyota, an Altima, and you look at a Toyota Camry, I actually went in just a minute and verified that they have very similar lease deals, like 39 months, $299 a month. Well, if Toyota can do that and Nissan's matching it, it means Nissan has to be bringing more money to the table simply to move the Altima off the lot as a lease. Just to be competitive, just competitive, they have to put more money on the table to make it happen. And I think that, personally, I think that 1.5 billion, I think that's an underestimate. I really do. I think it's going to be substantially higher than that. And I believe because the financial people at Nissan are the ones who threw up the flag and said, wait, we've got an emergency here. I believe that's what it is. If you have to force fleet vehicles with lower profit margins, your profit margins shrink down to almost nothing, you have to try to reduce your capacity. At the same time, you've got this bomb sitting out here that's going to be coming up in 1, 2, 3, 4 years. Oh, it's a bad picture. It's a bad picture for them all the way around. I hope you enjoyed this one, a little deep dive. I know it's a little dry. Tried to add some humor along the way, but I think this is a really important one because it asked that question, why is this suddenly an emergency for Nissan? And that's why. So if you did enjoy this one, because I really think this needs to be shared everywhere so people understand, please consider, if you loved it, like it, please consider subscribing. Please leave a comment below, and I really appreciate you being here. Thanks, y'all.